Hello, accounting students of AS level. Today we will solve a question of financial statements with adjustments. We have chosen this question. This is from June 2022, paper 21, question 1, part A, and it is of 15 marks. So you can find these questions in my notes, or you can download this from the website. Now here we have this question. We have to read it first carefully so that we can understand that how many items we have been given and which item is to be recorded in which statement or which part of the question. So Khin is a retailer. The following balances have been extracted from his books of accounts at 31st January 2022. So here we have been given some balances, advertising, carriage inward, and this and that. You can read through these items. So as I have already read this, so I will not waste time on reading this, but it is very important that you should read it first so that you can understand it. So for the following information is also available at 31st January 2022. If we see, these are the adjustments that we have to make. First of all, we have been given closing inventory that is of 13480. No, the second adjustment says no record had been made of goods taken for own use by Khin 910, means the owner has made some drawings of goods 910 which has not been recorded somewhere. So we can understand that this will decrease your purchases and definitely it will increase your drawings. Then where here we have this an irrecoverable debt of 380 which is to be written off. But if we look into the question, there are other irrecoverable debts that are also given to us, but these irrecoverable debts have been recorded. Okay, this $670 irrecoverable debts have been recorded already, and now we have to further record this 380 irrecoverable debts. So we will add them together and we will make a working for them. Then the fourth working is provision for doubtful debt is to be maintained at 5% of trade receivables. Okay, so first we have to look for the trade receivables. Here we have these trade receivables 15580, and then we will deduct irrecoverable debts first, and then we will take out 5% of that amount, and then we will compare it with provision for doubtful debt at start of the year, and then we will see whether the provision is increasing or decreasing. Okay, we will see what to do. Okay, then if you'll move on, we will see advertising includes a payment of 3250 for campaign which will last from 1 December 2021 to 30 April 2022. Okay, so this means that you have paid an advertisement expense that is of $3250, but out of this uh, payment, the advertising expenses covered 1 December 2021 to 30 April 2022. So if we see our year end is this 31 January 2022. So this advertisement campaign has been paid from 1 December to 30th April of next year. So how many months we have paid this? December, January, February, March, April, 5 months. So but our year end is 31 January 2022. So if we see 3 months rent, 3 months advertisement expense looks prepaid. So we will record this there. Rent receivable is 500 per month. So rent receivable is our income. We will record it in in the section of other income of income statement. So we will take it there. Wages are outstanding. Outstanding means that this is accrued. So we will take it there. Wages and salaries have been given to us. Here we have these wages and salaries. We will add them together. Okay. Khin sold his business only delivery vehicle in January 2022, resulting in the loss of 1350 shown in the balances at 31 January 2022. This means that he has disposed of some its old delivery vehicles and he has made a loss of 1350. This will be our expense, and then these are the two depreciations that we have to record in our income statement. First of all, this is depreciation of premises, which is of 2%. And then we have this furniture and equipment, which is of 15%, but through reducing balance method. Now we are good to go. We have like read all the question part. Now we will solve this. Now do remember that we will not use the word income statement now, because the examiner says that you have to use the word profit or loss statement. But this is an old paper. This is from June 2022. So it is for practice we will use these words, the word of income statement. But in the latest papers, like from October 2022 onward, uh, uh, the name of the income statement has changed. You will have to use the word profit or loss statement. But for doing this question, we will not change its wording. So let's start this question. Now the requirement says prepare the income statement for the year ended 31 January 2022. This is of 15 marks, and the lines have been given to you. I have made some work on it in order to save my time. Like you have this main format, and this is the main body of your income statement. You have two columns, like this is inner column, this is outer column of amount, and then down there we have workings there. You have to show working of each and every calculation that you are making in your question. So don't miss out any working. So these working 1, 2, and 3 and 4 are written by me in just order to in order to save my time. Okay, let's move on. So if we remember the format of income statement, first of all we will have to take sales. But here the sales word is not given. Instead, revenue word is given. So we will take the revenue here. So here we have this revenue. This is of 19,197,300. So we will take it here. If we read through the question, we haven't find the purchases sales return. So from here we will deduct cost of sales. So in cost of sales, if we remember in the format, we have opening inventory here. So we will not write the word opening inventory. Instead, we write inventory at. Now you can find it here. Inventory at 1st February 2021. Okay, we will write it here. Inventory at 1st February 2021. Okay, so if we see if, inventory values, the cost of the inventory is 12310. So we will write it here like this. Okay, I hope so that you are understanding this. Okay, if we follow the format, then you have to add purchases here. Okay, but for purchases, you have to make a working. Why? Because if you can see in additional information of 2, you see that no record has been made of goods taken for own use by him, that is of $9-10. So what you will do, you will pick the purchases amount here. Here we have these purchases 118220, and you will deduct 910 from this. So we are doing this in working one. Okay, so purchases are 118220, and the drawings of goods were 910. So after deducting this, we will get the amount of 117310. So this is the purchases amount that you have to take it here. Okay, 117310. I hope so you're getting this. Okay, now we'll move on. And after purchases, you have to find whether there are purchases return given in the question. There are no purchases return given in the question. So you will add carriage inwards after the purchases. We will take carriage inwards. Okay. Okay. If we see carriage inward amount is 2140. 2140. Okay. Then after that less you will subtract the closing inventory. So we'll use the word inventory at 31st January 2022. This is the year end. So we have to see how what is the Value of inventory, this is 13480. So you will deduct it from here, 13480. So this is the cost of sales part, and this is the cost of sales section. So if you will add these three amounts and you will subtract this amount, you will get your cost of sales. Okay. So we will see how much it is uh, coming here. So we will take out the calculator and you will see 12310 117310 plus 2140 minus 13480. So this is 118. This is 118280. So this is our cost of sales. Okay. Now if we'll move on, after subtracting the cost of sales, we will get our gross profit. So our gross profit is when we deduct 118280 from this 197300, you will get your gross profit figure, and your gross profit figure is 79020. Okay, great. Now we'll move on. After gross profit, we have to add other income. So if we see in the question, uh, there is a rent given there. This is rent receivable. So this is your other income. You will take it another income. But if you see in provision for doubtful debt, so first of all, you have to make some calculations for provision for doubtful debt in order to see whether the provision for doubtful debt is increasing or decreasing. So we will make working number 2 for this. So if we see how much is our trade receivable, what is the amount of our trade receivable? This is the amount of our trade receivable, 15580. So we will take it here because provision for doubtful debt relates to irrecoverable debts. So this is the amount of trade receivables, and you will subtract irrecoverable debts, those irrecoverable debts which are given in the additional information. Okay, this is 380. You will subtract this 380 from 1580. Okay, so this will give you the new amount of trade receivable. This is 15,200. Always remember that irrecoverable debts which have been listed out in the question, like this irrecoverable debt of 670, you will not subtract it from trade receivables. Why? Because these already have been adjusted in the ledger accounts. We will only take those irrecoverable debts which are given in the additional information. So we will subtract only these irrecoverable debts from trade receivables in order to find out our provision for doubtful debt at year end. So we are going good. So if we see, this is our trade receivables. This is our new trade receivables. We will take 5% of it. So 5% of trade receivables will give you $760. Okay. So what was the provision for doubtful debt at start of the year? So provision for doubtful debt at start of the year, this is given to you, is 840. And what is the provision for doubtful debt at end of the year? This is 760. So we will compare them. So provision for doubtful debt at start of the year is 840, and provision for doubtful debt at end of the year is 760. We will always do this. We will always have to compare the provision for doubtful debt at start of the year and provision for doubtful debt at end of the year. So at end of the year, the provision has decreased by $80. So we will write it decrease in provision. So this is decrease in provision for doubtful debt. So decrease in provision for doubtful debt is over other income. So we'll write it here, decrease in provision for doubtful debt. So this comes from our working number 2. Yes, I hope so. You're getting my point. I'm repeating this. In the question, I saw this provision for doubtful debt 840 at start of the year. Then I made a working. What I did is I take trade receivables amount. This is 15,580. Then I subtracted this irrecoverable debt adjustment from it. This is 380. and I ignored this irrecoverable debt which have been given in the question, like in the trial balance. So after deducting this, I got my new trade receivables. This is 15,200. Then I took 5% of that and find out what was the provision. This is 760. So $760 provision is at the end of the year. Then I find out what is the provision for doubtful debt at start of the year. This is 840. So after subtracting this, I got to know that I understand that provision has decreased by $80. So the decrease in provision is my other income. I will take it in other income part. I hope so. This is understandable to you. Okay, then we will move on and we will take other income. Is there any other income here in the question? Yes, there is. You have been given rent receivable of 7,000, but we will see there is an adjustment here. So rent receivable is 500 per month. So this is quite straightforward. You are making an income statement which which is of 12 months, but if we see this rent receivable amount, this is of 7,000. So 500, if we multiply 500 with 12, this will give you $6,000 of rent received. But in the question it is given 7,000. So it means there is a 1,000 advance receipts of rent income. So but what you will do in the working, you can make it simple. What you can do is you can write 500 per month is your rent, and if you will multiply it with 12 months, so you will get 6,000 rent income. So we'll take it here, rent received, or you can write rent income. So this is of 6,000, right? And this and how you have calculated this amount? You have calculated this amount by making working 3. This is like this. So here we have this 6080 done. So we are doing this question and we have reached at this point. Now if we can remember through the format, you have to subtract expenses from this amount. Other income, after other income you have to subtract expenses. So there are a lot of expenses there. So we will see in the question. We will start from the top. Here we have this advertising expense. Advertising expenses of 4,900. And if we look in the question, there is an adjustment for advertisement here. This is adjustment number 5. So we will make a working for that. So we will make working number 4 for this. I'm sorry. So in working 4, what you will do, you have paid 4,900 for advertising expense, as it is written there. Here it is written there. So what you will do, 4,900 has been paid, but there is a prepaid advertisement expense here. So how you will calculate the prepaid advertisement expense? So the question says in advertising expense includes a payment of 3250 for a campaign which will last from 1 December 2021 to 30 April 2022. Okay, so it means that this $4,900 includes a payment of 3250, which is for 5 months, and out of that 5 months, 3 months relate to the next year. So if we can calculate it further, so we will find that 1950 is prepaid in this amount. So how much advertisement expense you will take finally? So if we see, you will take $2,950 as your advertisement expense. So in expenses, you will take advertising and you will mark here working number 4. So this is 2,950. Done. This is good. Oh, We will move on. After advertising, we have already taken carriage inwards. Now you will take carriage outwards here. So carriage outward is our expense. So we will take it here. Okay. So if we see carriage outwards amount is $1730. Okay. Then if we move on, there is a furniture and equipment cost account. This is our asset. We will not take it in income statement, but instead we will take the furniture and equipment depreciation in our solution. So, uh, but it has been given in the working there, so we will take it there. Okay. Then we have after that general expenses 13450. So after carriage outwards, we will take general expenses 13450. Okay. And after that, here we have this loss on disposal of delivery vehicle. So this is a loss. So it means this is an expense. So loss is our expense. Loss on disposal of delivery vehicle. So you have been given 1350. Okay. Then after that, if we look into the question, you have been given this irrecoverable debts. So irrecoverable debt is your expense 670, but there is another irrecoverable debt adjustment that you have to take. So what you will do, you will write it here, irrecoverable debt. This is our expense, but we will mark a working here, working number 5. Okay, so working number 5 says that irrecoverable debts that already have been recorded in the ledger account is 670, plus there is a 380 irrecoverable debts adjustment which were not recorded during the year. You that has to be shown in the income statement. So this is like this 1050. So our total irrecoverable debts amount is $1050. Okay, done. Then after irrecoverable debts, as uh, I have put a gray shade on the items that I have taken. So now after that we have premises at cost. We will not take it in consideration. Provision for, then we have premises provision for depreciation. We will not also take it. We will also not take this in income statement. We'll move on. And these items have been taken in the income statement. So I mark them as a gray shade in gray shade. Then here we have these wages and salaries. This is our expense, but there is an adjustment there. This is working number. This is adjustment number 7. It says that wages outstanding are 1440. So what you will do, you will make a working here, working number 6. So how much wages have been paid? I think this is 34640 wages have been paid, and there is an accrued wages. This is 1440 accrued. Okay. Then you will get the new total of wages and salaries. This is 36080. Done. So you will take it here, wages and salaries. Okay, so wages and salaries, and we will mention that its amount has been shown in working number 6. How it is calculated, it is shown in working number 6. So this is 36080. Done. This is wages and salaries. And after that, if we look into the question, most of the things have been included in the income statement. Wages and salaries are also taken. I have already taken. Okay, but we have taken this closing inventory. We have recorded this provision for doubtful debt. Okay, then we have taken this loss on disposal. But what is the missing amount that we haven't recorded yet? These depreciations, that these are the adjustments that must be shown in the income statement. So don't miss out that depreciation is our expense. You have to show depreciation as your expense, and you have to show a working for each depreciation. So there are two depreciations that we will calculate. Number one is for premises and number two will be for furniture and equipment. So if we see we have already recorded six workings. So working seven will be for depreciation on premises. So if we see the premises is to be depreciated 2% per annum using straight line method. So what is the cost of premises? 3,60,000. So we will take 2% of this cost. Whenever there is a straight line depreciation, we will multiply the percentage given with the cost of that asset. So 3,60,000 is the cost of premises. And you will take the 2% of that and you will find out that 7,200 depreciation is to be recorded for premises. Done. And after that, you have to record the depreciation of furniture and equipment. But before that, we will record the depreciation that we have already calculated for premises. So we will show this first premises. Okay, this is working number 7. So I think the amount of the depreciation was 72. And in the last, what you will do, depreciation of furniture and equipment. So the depreciation of furniture equipment will be calculated in working number 8. Okay, let's do this working 8 and we will conclude our question. So working 8 says, in working 8 we will record furniture and equipment depreciation, which is to be recorded 15% using reducing balance method. So first we will find out what is the cost of furniture. This is 18,900. And what is the provision for depreciation? This is 7,300. So whenever you record a depreciation using reducing balance method, you will take out you will write the cost of that asset first, and cost of that asset is 18,900, and you will subtract the provision for depreciation that has been given in the question. So this is 7,300. This will give you 11,600 net book value. So this is net book value of furniture and equipment. And what is the percentage of depreciation? This is 15%. So after multiplying this with 15 over 100, the depreciation amount is 1740. Very good. So this is our depreciation of furniture and equipment. This is good. Done. Okay, so we have shown all the workings that is required by the examiner. You know, the working will give you marks. If you do not show the workings, you will lose your marks. Okay, so here we have these expenses here: 1, 2, 3, 4, 5, 6, 7, 8. These are 8 expenses. We will add all of these expenses and we will get our total expense. So the total expenses are this. And then finally what you will do, this is your gross profit. You will add this other income in it and you will subtract these total expenses from it. So you will get 19. So this is our profit for the year. Done. So we have completed this question. The requirement was to make an income statement that is of 15 marks. So you can take a screenshot here. So this is the income statement part. This is the body of income statement. After that, we have shown workings. These are the workings that we have shown. Thank you very much. Inshallah, we will meet with a new